Hi, this is Bobby Burke for the Multi-Millionaire Mindset Podcast. I'm here today with my good friend Shawn McSpadden. Let me tell you a little bit about Shawn. Shawn is the managing partner at Range Nashville. He is leading the build-out of the branch services while supporting a range of artists, including Midland, Haley Witters, Stephen Wilson Jr., Ryan Bingham, Drayton Farley, Tanya Tucker, Russell Dickerson, and Dilla Gossett, just to name a few. Shawn has been a good friend and client for several years. We work out a lot together, and he shares my passion for strategic investing. Welcome, Shawn.
Hey, thanks, Rob. I want to tell you that I don't manage all those artists myself. We've got an incredible team of people that do a great job surrounding those artists. So I'm just here to help out. But man, you're making me sound impressive there. But no, thanks for having me on. And you're right, man. I love this conversation we're about to have.
Oh, it's good stuff. It's good stuff. And I love the humility, opening up with the humility. That's beautiful.
It takes a village, man. A lot of good people working really hard.
Oh, that's critical. You're not kidding. So tell our audience about how you first got into music management. Maybe give a little background with your dad and growing up playing instruments and what have you.
Yeah, thanks. My dad was an artist, a writer, producer. I grew up with love of music. He really instilled the love of music. I thought I was going to be a rock star. That didn't really happen. So, I was playing drums and traveling through Europe and trying to, be in bands. And I realized pretty quickly I liked the business side better than I did the performing music side. And I actually wasn't good enough probably to be a true rock star. So I came back and got in the business side of music, and it's been great for me. It's been a great career over the last 30 years. It's been wonderful.
Oh, that's awesome. I love it. And again, I think there's a lot of humility here, but what is it you love specifically about what you do, and what really attracted you to the work you do today?
I've been through a lot of phases. I started out as a music publisher. I went in there when we ran record labels, and I was head of A&R and music publishing at one of the large labels. And really just through the morphs and changes and dynamics of the music industry, when CDs went away, before streaming came in, there's a lot of turmoil and flux. And we didn't really know what the music business was going to look like. And management just seemed to be the healthiest side of the business. And I really enjoy really staying close to the talent. I enjoy the fact that when you're a manager, your life is different every day, depending on what the artist has or what's in front of you or what problems you need to solve. So it's not the same every day, and that kind of excites me to get up and do something a little bit different every day. So it keeps it fresh.
Oh yeah, well, you and I have talked about that. Like, we both have such great variety in what we do every day, and it's just so nice. I mean, I don't know how you feel, but for me to be tied to the desk from 9 to 5, not interacting with people would just be brutal. How do you feel about that?
It's so hard. I mean, like I said before, I think a lot of people don't like their jobs because, jobs are tough and monotonous at times. And I think that, I tell my kids, I said, listen, if you want to do something exciting, then you need to prepare. And preparation creates opportunity, and opportunity creates freedom. So, those are the things that you got to do in life. And I say that for anybody coming up, that the greater you prepare, the more opportunity you'll have.
Absolutely. Let's jump into discussing investing. When did you first start investing, and specifically, when did you start using option strategies? And I'm going to just take a step back before I have you answer that, to give our audience a little background. When we're talking about options, we're frequently talking about selling covered calls. So the client's long on a stock, they bought the stock, and they're selling covered calls. Or if they're looking to get into a position on a discounted basis, they may be selling puts to create income and create a more attractive entry point. So with that quick little caveat, can you tell us about how you first got started with investing and how you ended up trading options?
Yeah, it goes back a lot of years. I really just, I guess probably started really back before the .com bubble in the 90s. Was really, always loved numbers, always loved strategy. And it was exciting to me to kind of look at ways to make your money work for you. I didn't like the idea of just sitting around and watching the market go up and then market go down and then the market go up and down. And I know it goes up, or history says it goes up over time. But I really just, was more, hey, if I'm gonna be able to have some money, then what can I do with that money in order to have it generate returns for me where I'm a little bit more in control of what I do than just relying on the market to go up and down. So that started really in the mid 90s. That's really where it started for me. It was just really a reading books and talking to people and searching out people who had some of the things that we're talking about here today, and going and sitting with them and asking a lot of questions.
Yeah, absolutely. It's interesting. So many people invest, like they're that kind of buy and hold mentality. So you invest and you're counting on one of two things to happen. You're counting on appreciation of the underlying security, and you're counting on maybe dividends. And those are the only two opportunities you have to make income. So what's unique with the covered calls is we're creating a systematic income while you're holding that position.
Correct. So it really came down to, there's buying of calls, there's buying of puts. I didn't like, that's not what I do.
Right.
And, so it was really more about selling the put and selling the call. And I really just enjoyed, I had to put some parameters around that strategy, which you can get in here today, and some lessons that I think we've all learned and how to do it where you really feel like it's less risky.
Right.
And at the same time, you're generating money off of the money that you're investing. So I think it's a great way to play the markets. Great way to build wealth.
No, it really is. Tell our audience, because I just think this is such a neat story. But tell our audience about your grandmother's nursing home situation, and specifically how options helped finance the bills.
Yeah, it is. You and I have talked about this. I mean, my dad came to me. My grandmother gotten older. We moved her to Missouri. My dad was putting her and my mom were putting her in a home. And she had some money, but not it wasn't like an infinite amount of money. I mean, it was, hey, we got to make this last. We don't know how long she's going to be here. And so I was talking to my dad, and I've been doing trading at the time, really on the S&P. And I said to my dad, I said, well, what do you need a month? He said, we really need about $3,000, $3,500 a month. And I said, I think I can make that, for her. And he's like, what are you talking about? And I said, I think if you let me have access to that money, we put it in an account, I can trade that money, and I can, every month you can get that $3,500 you need. He's like, okay. So I took the money and I started by selling some puts on quality individual stocks and on quality brands that you would want to eventually own. And by selling a put, it was just meant that the worst that would happen to me is that I would get that stock put to me at a discount,
right,
and I would own that stock. And so then once I owned that stock, I just started selling the calls above it, knowing that I had to hit a certain number each month. And we were able to generate that money for her really over every month for 3 or 4 years while she was in that home. It didn't delete her principal. That was able then to transfer that wealth that my grandmother had onto my parents, which was a benefit for them. And it was able to give her quality of life as she, was in that home, not worried about her finances and not the stress of my parents having to worry about her finances. And it was just a blessing. It was great.
Oh, I love it. That's awesome. One strategy we have both used over the years, and we talk about this quite a bit, is what I would call rolling up covered calls. So what this looks like is we're long on the stock's appreciated, we had a covered call, it's in the money, meaning that they could call it away from us, and we say, hey, I'm not ready for them to take it. So what we do with rolling it up is we buy off that call, and then we immediately sell a new call to finance the transaction, plus make a couple bucks, and we set that price higher out further in time. So can you kind of walk us through like how you've used that over the years and when
so what a lot of people don't understand is that when you buy an option, you're giving somebody the right to call you out of that stock. Right. It doesn't mean that you have to let them call you out of the stock. You can buy the option back and roll it out, which means, and roll it up. So if you're rolling up, you're increasing the value of what they would call you out of the stock for. And if you're rolling out, you're selling time value.
Right.
So people go, what are you talking about time value? I'm like, well, people will pay you for the time.
That's right.
Right, to call you out of a stock. And they're like, that's the weirdest thing I've ever heard. But it's real. There's somebody out there that will pay me, to call me out of this stock for the right to do that. And so Amazon is a perfect example this year that you and I have discussed of a stock that I really liked. I was looking for an entry point. I had sold some puts on the stock. The stock got put to me down around 120. And I was like, I'm happy to own Amazon at 120. I mean, today it's trading at 167, 168.
Right.
So I sold those puts. It got put to me at 120. The stock then reversed, went all the way down to 100, reversed back up. It's sitting at 130. I buy back my 120 calls, roll out a month or two. So let's say that was in November. I then turn around and sell the January calls at 130.
Yep.
So I'm rolling from 120 to 130, and I'm selling that time value from November to January. I get to January, I've got a couple of weeks left on this call option, and the stock's at 150. I'm like, dadgummit, it's running away from me. But I buy back to 130, I roll out to February, and I move up to 135.
Yep.
And I get to February. I'm like, it's now at 160. I'm like, this is crazy. I buy back the 135s. I roll up to the 140s and go out to April. And the whole time I'm picking up time value. So a couple dollars a share in time value.
That's right.
And I'm increasing my call value from 120 to 130 to 135 to 140. So now if they call me out of the stock, they have to pay me 140. Plus I've reduced my cost by the time value that they've paid me for, which is a couple dollars a month. So I'm making, $2 a month per contract.
Right.
Plus I'm rolling up, and I'm like, this is beautiful. So now, I'm like, and eventually I may get called out of the stock. I mean, it may continue to reflect. But as we know, stocks always will usually come back, or the market will pull back some. And so that's also what I'm waiting on, because I don't really want to be called out of the stock. I really want to own the stock and continue to make money from it. And I'm hoping that maybe the stock settles down a little bit, and I'll catch up to it here in a few months and keep playing the game.
I love it. And that's another thing you and I talk about all the time is, as options traders and stockholders, we have to stay very patient. And so you're trying to pick good quality stocks, or indexes that we're trading the strategies, ETFs, that type of thing. And just stay very patient. And that's such a critical component of it.
Bob, you and I have talked a lot about, you have to weather the storm. The market's always going to turn on you at some point, right? So you have to weather that storm. You can't be over leveraged. And the worst thing is that the market will entice you sometimes on brands or names or things that are not high quality investments. And you don't really want to go get greedy and sell those non high quality names, because they could turn on you. And if they do, then you own a stock that you really probably wouldn't have purchased. So the key here is, like you and I've always said, don't over leverage yourself, and only sell puts or invest in brands and quality stocks that you would like to own. And the worst that can happen to you selling puts is you will own that quality name at a discount.
Yeah, that's right. That's exactly right. What opportunities do you see right now in trading cover calls and cash secured puts with, the market run up we've had, which may or may not be real, and some of the challenges the market is facing in general, inflation, et cetera, et cetera? What do you see in that world?
Well, we all thought that with the Fed, you don't fight the Fed. That's one of the things you've always heard if you're an investor. You've heard this over and over again. With the Fed tightening over the last couple of years, all you heard was we're going into recession, and the market's going to have a hard landing, and it doesn't look like the recession's really happened. The economy stayed strong, the consumer stayed strong, jobs have stayed strong. It looks like it's more of a soft landing, and so the market really has run up. It doesn't faze me, because I'm still talking about high quality names that are incredible companies that I am still selling a put at a discount.
Right.
If Home Depot or Microsoft or Amazon is trading and I can make money on that stock while it's continuing to appreciate, fine, because I'm selling the put, it expires, I keep that money. Somebody, again, has paid me for the right to put a stock to me, and the stock didn't go where they thought it was going to, and so I keep their money. So if you're just patient and you work this plan and you continue to do it over time, you're just going to come out way ahead, and you're going to end up, I think, making your money work for you in a way that a lot of people don't understand.
Yeah, it's absolutely true. The three pricing factors in options in general are time value, market value, which is the overall market, and then intrinsic value, which is the actual holding you're looking at. So when we look at our more volatile positions, they're going to typically command greater premiums. But of course, there's more volatility there.
Correct. Volatility does create, and if the market overall, you see it sometimes in history or we've all lived through them if you're an investor, where there's incredible volatility in the market, and option prices do inflate, when there's a lot of volatility, which is not bad for an option trader. You want some volatility to create those premiums, in those option prices, because that's good for you.
Yeah, that's right. That's right.
It's not a bad thing. No. People are like, oh my gosh, the market's up the right. I'm like, it's good. I'm not worried about it.
Yeah, that's right. Well, it's, the key is staying patient. I've always thought it's funny. They call the volatility index the fear index. And So it's how much fear is in the market, basically. And, the funny thing is when you approach it as a real patient investor, that's not the right term for it, really.
It's not. And it goes back to what you and I said. Don't be over leveraged.
Right.
There's that old saying you hear the farmers, pigs get fat and hogs get slaughtered.
Right.
Don't be a hog. Right?
Don't be a hog. Right.
Don't be a hog, man. You're going to get killed someday. Because there's always that event waiting out there, the black swan, the event.
That's right.
Where something will happen, and you have to weather that. And so
That's
you
right.
have to
That's
have
right.
the ability to weather that storm. And so it's not a fear index to me. It's really a way to look at things and go, hey, yeah, there are a lot of people out there scared. I'm really not scared. I don't think we're scared. We're using that to make more money off the inflated price of the option contract.
Oh, that's absolutely right. When do you prefer to trade cash secured puts instead of taking a long position and then writing cover calls?
Perfect example this year was the Amazon trade we talked about.
Right.
Boeing had some bad news.
Right.
Nike just came out with some bad earnings. These are bellwether companies. These are great companies. I mean,
Right.
Boeing's not going away. Nike's not going away. If I'm watching it, and I will watch stocks, and this goes back to where you said be patient. I'm watching a stock. All of a sudden this quarter, Nike goes from 116 to 100, drops 16, 18%. Okay, I'll sell a 100 put or a $95 put. Would I want to own Nike if I liked it at 116? Would I want to own it at 100 or 97 or 95? Absolutely. Same thing for
Right.
Boeing. Same thing for Amazon. Same thing for Microsoft. So lots of times I'm looking at selling puts on companies that I want to own, but also maybe have reported some bad news.
Right.
And therefore you're like, I can pick this up at a discount. Did that recently with Apple. Same thing.
Right.
Great stock. Want to own Apple. Love Apple.
Right.
But man, it's really run up. So
Yeah.
they go out some bad news. iPhone sales aren't as good. Stock drops 15 points. You're like, there's my entry point. I'll
Right.
sell the puts.
Right.
If
Right.
it does get put to me, I keep the money. If it does get put to me, I sell the call.
Yeah, that's right. That's right. Love it. I typically, similar approach for what I do for most of my clients, which is use the puts when I see an opportunity like you're describing where I want to create that discounted price. So basically it's, you're looking at a position, you're saying, okay, I like this stock, but I like it even better for 5 or 10% less, maybe
Yes.
20% less. And then just always be ready to turn around if it's put to you. Again, stay patient and turn around and sell your cover calls and make your income that way.
Yep.
What do you enjoy the most about trading options?
I really love the fact that I'm more in control.
Yeah.
And I don't mean that in a way of like I'm a control freak. I mean, we all like to be in control of some areas of our lives. I've always liked to bet on me. I'm an entrepreneur. I like to bet on me. And when I bet on me, I usually am looking at my life. I'm 55 now. I'm more often than not have come out ahead and won. And just sitting there letting other people dictate the market that I don't know around the world and macro and micro, I don't know. I don't care. Like I'm looking at great names and I want to be in control of the wealth that I'm creating for me and my family generation. And that is really what I love about it. That's what excites me about it every day. It's like, I sold some calls this morning on a stock and that money went into my account and it felt good.
It does feel good. That's exactly right.
Good.
This is great today. Just a couple personal questions to kind of wrap up with. So you're really well traveled, as we've discussed before. If you weren't going to live in Nashville, where would you want to live instead?
It'd be internationally. I love Nashville. When I was growing up here, I always told my dad I was getting out of this town, and now it's become a big city, and it's really a great place to live. And I love the music, and I love the culture, and I love the vibe. But man, I'd love to be on the water. I'd probably live in Barcelona or Porto, Portugal, or some European city, or maybe in Mexico, where it's warm, somewhere warm and on the water, and I'm happy.
How's your Portuguese?
It's horrible. Not as good as my Spanish and everything.
Right. Exactly.
I talk with a bad accent. And my kids.
Oh, that's great. I love it. Final question. What do you consider your greatest achievement in life?
Oh, my kids, my children.
Love
I think just having them be really good people and healthy, happy humans, and giving back to the world and society, and I think that I look at them and I just am really proud of who they've become, and they're little investors. They have watched me over the years, and they're like, "Dad, what are you doing?" And we'd write it out, paper trade, and I'd have them paper trade, and I'd do a little game with them sometimes. I'd say, okay, we're going to have, $5,000 in this account, trade your stocks this month. let's see what gets put to you. Let's see what you can write calls on. And over a quarter, we would look at it at the end, and whoever won, I'd give them a treat, buy them something, and it really taught them this thing. And so now, my daughter and my son both are really knowledgeable, young people that are using these strategies that I wish I would have known when I was, 18, 20, 22, 23 years old, instead of learning a little bit later in life, because I feel like I could have even been further ahead than I am.
Well, having met both your kids, they're fantastic. So that's really neat. When I think back for myself, I remember in high school, even middle school, I would trade paper trade like you were describing. And that was back when stocks trade in fractions, not in decimals. So I had to figure out a way to get the Apple IIc. I'm going to totally date myself here to to calculate that for me. But it was fun, and it really kind of inculcated some of the love for trading before it was real. Well,
I tell you, I think there's an excitement to it. There's an excitement once you understand the market and you understand the strategy, and it's not scary. I think things that you don't understand and don't know in life are very scary, and we're fearful of things we don't understand and don't know in culture. Well, once you understand it and you realize that there's minimal risk and there's a lot of upside, then the market, this big thing out there with all these numbers and stocks, and the people used to see them yelling at each other and throwing orders. That doesn't happen anymore. It's kind of a scary place for a lot. It's intimidating.
Yeah, that's right.
It shouldn't be. And this is one of the things I wish they taught in school, that they would take that fear out of kids and they would educate them. Because if they would really educate them, then they would begin to understand that there's a lot of ways to make your money work for you. There's a lot of ways to earn wealth, and you can be in control of it, and you don't have to be scared of it.
Love it. Love it. Well, thank you so much, Shawn. I loved having you on as a guest. This was a wonderful talk.
We're done?
We're done.
I could talk about this for hours, man. This is my favorite thing.
Oh, that's great. This was fun, wasn't it?
It was great. I love talking to you about this stuff. I will say this. I don't know if this will make the podcast. Maybe it does. Maybe it doesn't. But Bob, we're working out together. And he was over there. I said, "What do you do?" He's like, "Oh, I'm a financial investment advisor." And then I heard some of his conversations after we were working out, and I said, "Wait a second, you're talking about things that I understand." He goes, "What do you understand?" And we just dug into it, and I was like, "Wait, you're one of the rare guys that understands this whole strategy."
I remember it well. It was such a mutual moment where, like, "Hey, you know what I know."
Most people don't.
Yeah, most people don't. Most
people don't. I mean, there are so many investment guys that I've interviewed over the years that want to have my money or want to work my money. And I'm like, okay, walk me there. Oh no, we don't touch that. I don't even understand that. I don't even know that.
Yeah.
And I'm like, then you're not for me. I don't work with people that I'm smarter than. I want to work with people that are smarter than me.
That's right. Oh, that's a great rule of thumb. One of the things we talk about with the multimillionaire mindset is, what multimillionaires do. And you just nailed it right there. It's that thinking, like, I'm going to work with people that are, that get it. Absolutely.
I want you challenging me, and I want you showing me stuff that I don't know so I can learn more.
That's right. That's right. Thank you, Shawn, for being on the show today. This is Bobby Burke for the Multi-Millionaire Mindset Podcast. It was great talking to everyone today, and we'll look forward to seeing you soon. Thank you.